Some stocks just don't know how to quit. Just look at the incredible run in the stock of Western Digital, WDC, the maker of hard drives and maybe in this case more important flash memory chips, with a stock that's now more than doubled from its lows less than a year ago, including a double-digit gain for 2017. Very nice rally today. Ever since Western Digital bought SanDisk, the flash memory kingpin, in May of last year, the stock's been on fire, which is one of the many reasons we own it for my charitable trust, as ActionAlertsPlus.com club members already know. But even though this company just reported some spectacular results last night, it remains a controversial stock. On the one hand, Western Digital just posted a massive 25-cent earnings beat off a $2.14 basis. Stronger than expected revenue, extremely bullish guidance for the next quarter, and very reassuring conference call commentary about the state of the flash market. It was pretty much a flawless quarter. Yet this morning, analysts at Wells Fargo actually downgraded the stock, saying it has limited upside. Personally, I think that's a mistake. Western Digital has already given us a solid gain since we last spoke to the CEO in December, and while the stock climbed a few bucks today, I don't believe it's baked in. All the good news is in this stock yet. Consider that Western Digital forecast it could earn $12 for the full 2017 fiscal year, while even the most bullish analyst was only looking for 8 and change. When a company's raising numbers like this, you typically don't want to sell it. You want to own it. Don't take it from me, though. Let's check in with Steve Milligan, the CEO of Western Digital, learn more about the quarter and his company's prospects. Mr. Milligan, welcome back to Mad Money.
Thank you, Jim. Good to be here.
All right, Steve, I think a lot of the people at home are trying to figure out how could people think that you would be earning, say, about $8 when they were off maybe by as much as 50%. Can you describe what are the dynamics in your business that are allowing you to think that you could earn that much money?
Well, I think there's a few things, Jim. One, we're dealing with really some very strong secular drivers in terms of what's happening from a demand perspective. And when we all see how data is growing in terms of our professional and personal lives, we've tried to assemble a platform that enables us to service all of the needs of our customers in terms of those data requirements. And then not only that, a financial model that is heavily leveraged. So when it gets good, it gets very good. And not only that, I think the other thing, Jim, that we've got to understand is it's a very resilient business model that not only allows us to do very well when the market is very strong, but when it gets a little bit weaker, which sometimes it does, we've also got a lot of levers that we can pull to manage that volatility on the downside as well.
But isn't it true? I mean, I think you're being a little too humble here. I mean, you happen to have a flash memory that is in the sweet spot for what every single company last night, whether it be Amazon, whether it be Google, whether it be Intel, they all want what you have or have to buy it from you.
Well, that's absolutely right. I mean, and again, we tried to assemble a technology and a product portfolio that really served a very diverse set of customers, including all those hyperscale customers that you're talking about, not only in terms of flash, but we're also selling high capacity 10 terabyte, 12 terabyte drives to these customers that help store all of that data that is being ingested and created, across the globe.
And yet there's always people out there, I mentioned this Wells guy, who thinks that it's peaking. Now, I happen to own 5% of your company at one point when I was a hedge fund manager. And when I recognized it, you can put up disk drive factories pretty easily. It seems like that these flash factories, people are presuming you can put them up in 6, 12 months. But from your 3D flash, that doesn't seem like you're able to do that.
Oh, I think you're absolutely right, Jim. I mean, and this is tough technology, right? I mean, this is not easy stuff that we're doing. And this 3D conversion that we're going through, it's a challenging conversion for all of us. And it's not happening as rapidly as everybody expected. And so we're seeing supply grow at a smaller rate, but demand continues to explode given all the data that we're creating. And so it's creating a very virtuous opportunity for us as a company. And again, resulting in that kind of financial leverage that I talked about earlier, which is great for us, great for our company, great for our shareholders, and great for our employees.
Now, you have a partner that's been in the news, been a partner for a long time. You put many millions of dollars in your joint venture with them, which is Toshiba. It's something that no one can really call because that company is in dire financial straits. All I want to say, what I want our viewers to say, Steve, is even in a worst-case scenario, is Western Digital still protected, and can the core business be sustained if the wrong guy gets this incredible asset that's Toshiba?
Well, and that's absolutely right, Jim. I mean, that's our primary goal. I mean, the joint venture that we've had with Toshiba is 17 years running. I would contend that is probably one of the most successful technology joint ventures in the history of our industry. And so our first goal is let's keep that joint venture healthy. It's been very prosperous for our company, for Toshiba, for Japan, for the United States, and so we want to protect that, and we've got legal provisions that enable us to do that. And that's really our first goal, is to protect not only our interests, but protect the long-term health of that joint venture so that it can continue to thrive into the future.
So do you think that our viewers at home who are not as attuned to every single nuance of this do not have to focus necessarily on that joint venture, but can focus on what you do, which is make the most important flash memory in the world?
I absolutely hope so, and I mean that's really our intent. I mean it's been difficult for us to see the challenges that our joint venture partner has had in terms of Toshiba, and we're in constant communication with them, trying to help them solve the challenges that we have. We know that that creates a little bit of a overhang in terms of how people view our company and our stock, but rest assured we're going to do our very best to make sure that we protect our interests and advance not only our position but the stakeholders that Toshiba has, and really come to a resolution that helps us to continue to be successful going forward.
All right, last question. With $12, I mean, I know you're committed to deleveraging. If you can't buy Toshiba, if you don't get that chance, is this money just going to go to making the balance sheet better, or are there some other things you should be thinking about doing?
Well, our capital allocation priorities really are, one, we want to make sure that we're reinvesting the right money back into our business, to continue to develop new products, to innovate, to continue to transform our company. We've got a dividend. We're very committed to that in terms of returning capital to our shareholders. And then, of course, after that, we're going to continue to deleverage our balance sheet and de-risk our position from that perspective. So, generating all this cash gives us a lot of options, and we want to make sure that we reinvest that money back into our business and return it to our shareholders in a way that creates long-term value for ourselves and for our shareholders.
Well, that's just what everybody should want to hear if you're an investor in Western Digital. Fabulous quarter, sir. Steve Milligan, the CEO of Western Digital. Great to talk to you.
You too, Jim. Thank you.
Right. This company is executing in a way that very few companies are. Now, I know Amazon reported last night and Alphabet reported last night, and they were good. This company had the biggest surprise. I love that. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.